Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. The news of what starting to look like an unstable economic situation developing in the US. First, the new Fed chairman, Jerome Powell, has been testifying before Congress, and his remarks have been taken as a relatively hawkish signal that there are likely to be 4 US rate hikes in 2018 as the US Central Bank tries to take the edge off overheating from the US corporate tax cuts. He is not the only one worried about the policy track. Reports are that Japanese investors are selling US Treasuries over worries that current policy will result in currency losses for them if they hold these bonds. The impact may become self-fulfilling. And evidence of unrealistic optimism can be found in the widely watched Consumer Sentiment Survey out today. It is now at its highest level since November 2000. Pay may be rising quickly in many places, but investors worry that it is not being matched by productivity, and they know that that is the only sustainable way higher pay can be held, unless inflation reignites. The signs are not good for the US productivity, so that is why investors see and fear inflation. Bottom line, there is a move to sell out of US Treasuries, which will raise yields. The American trade balance worsened in December to a monthly rate of $74.4 billion, and well above market expectations. That is only the goods portion, however. They run a surplus of services of about $21 billion per month. The January data on durable goods orders was not too flash either, down 3.7% and far lower than expected 2% decline. Unsurprisingly, inventories, both retail and wholesale, rose, and by more than expected. In Germany, a landmark court ruling gives cities the power to ban diesel cars. These have been shown to be a major cause of pollution. Some say it's the death warrant for diesel cars. New Zealand is full of such older diesel-powered models. And staying in Germany, the head of their central bank and a persistent critic of the ECB said that QE bond purchases could end this year if the economic upswing continues, another step on the long road to unwinding unconventional stimulus. He is seen as a possible successor to Mario Draghi, whose term expires in 2019. In China, home sales in 21 major cities surveyed fell 29% year-on-year in February as the Lunar New Year holiday threw cold water on property transactions across the country. In New York, US Treasury 10-year yield is up 6 basis points to 2.92% on the Powell testimony. The gold price is down sharply, down $16 to $1,315, probably also for the same reason. Oil prices are lower by about $1 today, with the US benchmark now just over $63 a barrel and the Brent benchmark just over $66.50 a barrel. And the Kiwi dollar will also start today about a half% lower at 72.4 US cents, and the cross rates were lower too at 92.8 Aussie cents and 59.2 Euro cents. That puts the TWI down to 73.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.